Hello and welcome to episode 8. We're talking about tracking the Payroll Protection Program funds. Many of you have likely received funds from that program, and it's very important we track those correctly in order to get that loan forgiven. And so there's two things we want to talk about today. One is making sure we track that loan, and two is making sure that we preserve cash. The purpose of this thing was to be able to preserve our cash for other expenses and have this help out with your payroll expenses. So we're going to go through an example of how you can do that and how I'm recommending to my clients that we do that. And basically what we would do is put the money that we receive from PPP in a separate account, and then we will calculate our payroll amounts each time and any rent, utilities, so forth, and transfer that exact amount into our operating account or payroll account. And then what I'm recommending is we have a third account even that I call the drip account. It's like a reserve account. It's like a third account for holding cash in reserve for a rainy day, for those difficult times that might come ahead. If we don't do that, that cash will just disappear. And so the way we're going to do that in my example here is we will transfer the same amount of money that we use from our PPP loan. We'll use that same amount from our operating account or payroll account and put it into a reserve account, or at least as much of it as we can. And that way that money will be reserved for future needs. So in our example here, we're going to assume that a company received $49,000 in a PPP loan from the SBA, and they have payroll of $20,400 per month and rent and utilities of $4,100 per month. Now this program is for an 8-week period, so there'll be 2 months of rent, 2 months of utilities, 2 months of payroll. So let's go ahead and look at that example. First of all, we're going to need to set up some new accounts in our accounting system. I'm going to assume we're using QuickBooks, but be whatever accounting system you're using. You'll have some existing accounts. For example, your operating account, and maybe you have a payroll account as well. You'll have an account already set up for payroll, for wages and taxes, and you'll have an account set up for rent and utilities. We'll be leaving those intact, but we need to create 4 new accounts. And those are note payable for the loan, the PPP loan. You see I'm calling it N/PPPP. And then we're going to have a bank account that we're going to set up. It can be a checking account or a savings account. I set it up here as a checking account. And I'm going to call that one PPP, or PPP funds. That's a bank account. And then we're going to have an other income account where we're going to record the forgiveness amount once the loan is forgiven. And then, of course, the drip account, which, as I said, is a reserve account. And it's a bank account as well. So we're going to set up 2 new bank accounts, one for the PPP funds and one for our drip account, which is for reserve funds. And we're going to set up the loan account as a liability and our other income, which is non-taxable for the amount of the loan that gets forgiven. So we'll get those set up. Now, as far as the plan goes, you can see when we start, initially the PPP bank account will have nothing, the drip account has nothing. We're going to assume for our example that the operating account or your payroll account, whichever you're using, or both, is at $50,000. In this case, we'll use the same account for OPEX and payroll. So at the beginning of the process, we get our loan funded, and in this case, $49,000 is funded to us. And so we put that in our PPP bank account. Okay, and the next thing we'll see is we'll have a payroll. We calculate our payroll for the month. $20,400 is our total cost of payroll. That would be wages and the employer taxes. So we will transfer $20,400 from the PPP bank account into our operating and payroll account, as you see here. And then we'll process our payroll, which we get paid with that money. Then what I would encourage you to do is to act as if you were running the business without that and just reserve that same amount of money. So we'll take $20,400, which would be our normal payroll number, and we're going to transfer that amount out of our operating account into a drip reserve bank account. Okay, as you see here. Rent utilities the same way. $4,100 is our rent utilities for the month. We're going to transfer that amount exactly from our PPP bank account into our operating account and pay our rent and utilities. And then I'm recommending that we transfer that same amount from operating expenses into our drip reserve account. At least as much of it as we can, so that we preserve that cash for future needs. Month 2, you can see that we do the same thing. Calculate the payroll, transfer that amount, pay our payroll, and then do our reserve. Transfer that same amount into our drip reserve account. Same with our rent and utilities. So at the end of that 8 weeks, if we've done what we plan to do here, we would have used up our PPP funds, all $49,000 in this case. Our operating account started at $50,000. We will have $1,000 left in that. This is assuming we have nothing else coming in or going out other than these for simplicity. But notice that our drip reserve account now has $49,000 in it, which we then can use for a rainy day fund. We can use if we have a shortage in the future due to this crisis. We may have to use some of that as we go along in these 8 weeks. That's highly possible, but we want to reserve as much of it as we can, because at the end of the 8 weeks there's still some possible cash flow issues that we're going to have. You'll also notice in this example that our loan usage summary, we used 83% of our money for payroll and 17% for rent and utilities. That would meet the criteria for having this entire loan forgiven of $49,000 according to today's standards. So that's what we want to do. When the loan is forgiven, what will happen is we'll have a journal entry, which will then clear the $49,000 from our note payable and put that into our other income, $49,000 into a PPP loan forgiven account that we talked about. That's the debit and the credit for that. And then that loan will be relieved and everything will be working correctly. Then we can run our payroll reports and all the reports they might desire for us in order to have the loan forgiven, and everything will work out just fine. If you're using the Profit First system, which I encourage you to do, if you don't know what it is, please contact me. I'd be happy to explain it to you. It's a wonderful cash flow system based on the book Profit First by Mike Michalowicz, and I am a certified Profit First professional. And in that system, we would allocate funds to various accounts, and this process becomes actually very simple and very effective, not just in crisis situations, but throughout your business life, and enables you to create profit and good cash flow for you and for the business. So hopefully this helps, and we will see you next time.